Good afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front. Malaysia's benchmark index experienced immediate profit taking during early morning trade, raising a portion of the previous session 10-point rally. At 9 a.m., the FVMK LCI fell 4.65 points to 1,736.96. Broader market sentiment remains constrained by ongoing geopolitical impasses between the United States and Iran, alongside elevated global energy prices. Brent crude futures for October delivery dipped slightly below $88 a barrel as key shipping lanes through the Strait of Hormuz remain restricted. According to OPEC Securities, the FBMK LCI continues to test the upper boundary of a downward sloping channel that has kept market momentum since early 2026. Technical analysts noted that for a sustained bullish trend to take hold, the benchmark index must clear the immediate resistance zone between 1,760 and 1,770 points. Immediate market support is pegged at 1,720 with a secondary support floor near 1,700. On the macroeconomic front, an inline U.S. Consumer Price Index report overnight bolstered market expectations that the Federal Reserve will hold interest rates steady at its September meeting, with rate hold odds rising to approximately 60%. Early selling among index heavyweights was led by pressed metal aluminium, which dropped 13 cents to 7 ringgit and 86 cents, alongside IOI Corporation down 8 cents to 4 ringgit and 47 cents, and SD Guthrie sliding 6 cents to 6 ringgit and 74 cents. Banking stocks also pulled back, with Hong Leong Bank shedding 28 cents to 22 ringgit and 42 cents, Maybank dropping 2 cents to 10 ringgit and 58 cents, AMMB Holdings declining 4 cents to 7 ringgit and 33 cents, and Public Bank easing 2 cents to 5 ringgit and 17 cents. On the active counters list, technology and semiconductor linked shares saw buying interest led by Key ASIC gaining 1 cent to 4.5 cents, Opstar advancing 3 cents to 71.5 cents, and Aimless rising 3 cents to 45 cents. Moving on to our local currency and foreign exchange. The Malaysian ringgit opened higher against major global currencies this morning but traded slightly softer against the US dollar following the release of July US Consumer Price Index data. At 8 a.m., the local currency edged down to 4.0850 to 4.0950 against the greenback from yesterday's close of 4.0835 to 4.0875. Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzanizam Abdul Rashid noted that US CPI inflation moderated slightly to 3.4% in July from 3.5% in June, which matched consensus expectations. Following the inflation release, 10-year US Treasury yields fell below 4.7%, while 2-year note yields dipped to 4.2%, indicating that the Federal Reserve remains in no rush to hike rates further. However, ongoing supply chain concerns around the Strait of Hormuz continue to sustain potential inflation risk in energy markets. Bank Muamalat projects the ringgit to fluctuate between 4 ringgit and 7 cents and 4 ringgit and 9 cents against the US dollar throughout today's session. In cross-currency markets, the local note gained across major pairings. The ringgit strengthened against the Japanese yen to 2.5637 from yesterday's 2.5655 close, while rising against the euro to 4.7092 from 4.7107 and improving vis-a-vis the British pound to 5.5135 from 5.5180. Among regional currencies, the ringgit picked up against the Thai baht to 12.3418 but traded slightly lower against the Singapore dollar at 3.1912. The local unit remained flat against the Indonesian rupiah at 228.5 and the Philippine peso at 6.67. Now for some economic news. Renewable energy construction activity across Malaysia is entering a rapid growth phase, with battery energy storage systems or BESS emerging as a critical component of a national grid infrastructure. As Malaysia targets 70% renewable energy generation capacity by 2050, energy storage deployment is becoming essential to balance intermittent solar power, support grid stability, and provide continuous power for the surge in data center developments. A recent research note from Hong Leong Investment Bank highlighted energy storage as a billion ringgit growth opportunity driven by government initiatives such as large-scale solar 6, which includes 1,250 megawatts of BESS capacity. Data centers, which require uninterrupted power supplies, are increasingly turning to battery storage as a cleaner, faster-responding alternative to traditional diesel generators. Capitalizing on this momentum, digital services company PUC Berhad is entering the energy storage sector through the proposed 6.75 million ringgit acquisition of HBES as the NBHD. The transaction will be funded via a 10% private placement of up to 304.8 million new PUC shares, expected to raise gross proceeds of 10.49 million ringgit. HBES has partnered with China-based storage manufacturer Lithium Tech HK to establish a local assembly line in Malaysia with a targeted annual capacity of up to 2.0 gigawatt hours. The acquisition includes a profit guarantee of 3.5 million ringgit in aggregate audited net profit for financial year 2026 through 2028, positioning PUC to capture expanding commercial, industrial, and utility-scale energy storage demand across Southeast Asia. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. DPS Resources Berhad has announced a major strategic step in its digital infrastructure pipeline. Its wholly owned subsidiary Shantawood SDNBHD signed a memorandum of understanding with BBSB Holdings, a subsidiary of Hong Kong-listed BBSB International Limited, for the proposed phased lease, development and deployment of data center capacity of up to 89 megawatts with potential long-term expansion up to 400 megawatts. Under the framework, BBSB will act as a strategic partner to support the development, infrastructure provisioning, and off-taker coordination for Shantawood's proposed facility in Malacca. The proposed 89 megawatt initial allocation is structured across 4 delivery phases, which are Phase 1 targets 20 megawatts in 2027, Phase 2 aims for 20 megawatts in 2028, Phase 3 plans for 20 megawatts in 2029. Phase 4 will complete the initial build-out with 29 megawatts in 2030. Further scaling up to an aggregate 400 megawatts remains subject to technical feasibility, regulatory approvals, and definitive agreements. To support the project, Shantawood has completed key utility and regulatory groundwork. Tenaga Nasional Berhad and SDT Engineering confirmed power availability of up to 500 megawatts and 89.1 megawatts for the respective sites. Syarikat Air Melaka Berhad issued a no objection letter on August 7, 2026, validating adequate water supply, further confirmed by GNL Engineering Consultancy. The Chief Minister of Malacca issued a letter of support on July 30, 2026, with formal submissions currently under evaluation by the Data Center Task Force. In the local equity market, shares of DPS Resources traded unchanged at 53.5 cents this morning, giving the group a market capitalization of approximately 142 million ringgit. Up next, we have a commodity update. Retail prices for unsubsidized fuels across Malaysia have decreased for the week spanning August 13 to August 19, following a decline in global crude oil prices during the latest automatic pricing mechanism calculation window. According to the Ministry of Finance, the price of premium RON 97 petrol drops by 20 cents to 4 ringgit and 50 cents per litre, whilst unsubsidized RON 95 decreases by 15 cents to 3 ringgit and 62 cents per litre. Unsubsidized diesel also fell by 10 cents to 4 ringgit and 47 cents per litre. Subsidized fuel price under targeted assistance programs remain unchanged. Eligible consumers continue to pay 1 ringgit and 99 cents per litre for RON 95 under the Budi 95 program and 2 ringgit and 10 cents per litre for diesel under Budi Diesel. Under these caps, the government bears a subsidy absorbment of 1 ringgit and 63 cents per litre for Budi 95 and 2 ringgit and 37 per litre for Budi Diesel. The ministry noted that global oil prices initially dipped below $80 a barrel on early hopes of US-Iran negotiations before rebounding late in the pricing cycle due to renewed tensions surrounding the Strait of Hormuz. Authorities continue to urge the public to practice prudent fuel consumption to mitigate broader economic pressure. Today's major corporate developments and deals across Malaysia. PTT Synergy Group Berhad has entered into 5 separate sales and purchase agreements with Koperasi Kaki Tangan Bank Rakyat Berhad to sell 5 industrial warehouse units located in Pontian, Johor for a total consideration of 260 million ringgit. In data center developments, Southern Score Builders Berhad secured a 105 million ringgit subcontract in Puncak Alam, Selangor through its 51% owned subsidiary SJEE Engineering. In public transport infrastructure, EITA Resources Berhad's wholly owned unit, EITA Elevator, accepted a 62.3 million ringgit letter of award from Prasarana Malaysia to upgrade existing lift and escalators LRT stations along the Gombak to Kelana Jaya line. For agricultural expansion, CAB Cakaran Corporation Berhad via CAB Cakaran Timur Inc. 3 lease agreements with the Terengganu state government for 414.63 hectares of land in situ and Dungun to set up a modern poultry farming project. In settlement and property developments, Binasat Communications Berhad will receive 32.2 million ringgit from Cosmopolitan Avenue following the mutual termination of their sale and purchase agreement for Empire City. Meanwhile, Sunway REIT reported a 5.2% year-on-year increase in net property income to 163 million ringgit for its second quarter of financial year 2026, driven by stronger contributions from its retail and hotel assets. On regulatory and governance matter, Industronics Berhad lodged a police report and removed former executive director Liu Wing Yi Ami from all positions across the group after discovering over 96 million Hong Kong dollars in trade receivables concentrated among a small number of customers at its Hong Kong subsidiary. That's a wrap for Midday Roundup with me, Dini, on KleverStock. Thank you for choosing us, investors. Stay tuned for our upcoming live stream programs.